Okay then guys, welcome back ladies and gentlemen for another YouTube video. This is going to be your daily cryptocurrency market update and we're going to be going over a few things. We're going to be looking at the short terms for Bitcoin. You know, we've been sort of expressing our thoughts that really since, and we were calling for this short squeeze, that Bitcoin was likely heading on a upward trajectory. And I still am somewhat biased that we are going to see at least maybe a run of 18K. However, we have continuously reiterated our kind of concerns that to long this market, and I'm currently, I wouldn't say trapped in a long, but I'm currently in a long that is slightly down. To be totally transparent, it has always been very much like playing Russian roulette, and we've really stated that if you're going to long this market, don't do it with big size, big leverage, and make sure you've got risk management in place, because the crypto market just, it feels dead. And what do I mean by that? Well, I mean from a trading point of view, after we had FTX get taken out, it feels like there's been a huge lack of bid in the market. So when I say I feel that the cryptocurrency market feels somewhat dead, what I mean by that is it's lost its momentum. It's lost its kind of oomph, if you will, from a trading point of view, from a price action point of view. The cryptocurrency market, in terms of the cryptocurrency blockchain as an industry, has never been so alive and as innovative and as kind of progressive as where we currently are. However, from a trading point of view, since FTX, you know, the market is really suffering, I think, given this bear market, from a lot of PTSD. And we've got this kind of tombstone around our neck, which is the US stock market, which really predicts and kind of dictates what's going to happen in the crypto space. Even though yesterday, I think we looked kind of primed. We had a, you know, stock market, NASDAQ closed down 2%, S&P's 1.4%. Dollar actually has, you know, sort of started to regain quite a bit of its strength. We did call for a bit of a risk off on Monday, looking at Mike Wilson's comments from Morgan Stanley, who was essentially talking about closing his tactical longs. So I will be doing some short-term technical analysis. Really, we trade price action more than Elliott Wave or Fibonacci's or any of these. You know, they are useful tools that you can implement in the charts, but in my opinion, the best traders out there are price analysis traders, people that take the price for what it is and can read a chart and move forwards with it. So we will be doing some short-term analysis. Again, I just feel like the market is really lacking a bid here, and I think it has a lot to do with FTX. And I think even though maybe you've got the setups for continuation to the upside, and we've sort of likened what we may get now to what we saw in March 2020, we looked at the bullish divergence that you had on the RSI, but we'll talk about all that and cover Bitcoin in specifics in regards to the technicals. I also feel like going into next week, which is when we're going to get the CPI print for the US, which is the forecasts are coming in that it's going to be slightly lower, so 0.1% lower than it has been previously. I feel like there's actually probably going to be quite a lot of de-risking going into that, and that's potentially what we're seeing. You know, I still, again, I'm biased on the short term that there's a little bit more upside to be had, but it's shaky. It's not high conviction from me at all, and like I say, you know, the kind of feelers that I'm getting from the market are just that it's very weak. Indeed, I mean, it just seems to be so correlated with the stock market, in terms of it can't get away from it. And today we got gold up, we've got the dollar slightly down, but Bitcoin isn't finding any strength necessarily from that, which kind of leads me to believe that, again, I think there's a real absence of a bid coming out of the FTX crash, and that's concerning. The FTX actually led the market in terms of the derivatives futures market for Bitcoin and the crypto market in general. And they've been taken out, and a lot of liquidity has been lost as a result of that. So there's a real PTSD going on for the markets. Before I get into all that, and we've got quite a bit to go over, you know, we're seeing, it's almost like a given now that we're going into a recession. I think we're already in a recession. I think we have been for the past 6 months. But you're seeing growing concerns of this. So Japanese economists could see us entering a recession in 2023, economists says. This is the German yield curve. And I want to go on to our yield curve, or the United States' yield curve. So this yield curve, and we've explained the yield curve in quite a bit of detail, but it's essentially when your lower rate bonds offer a higher yield than your longer duration bonds. So this is the 2-year bonds and the 10-year bonds yields. You're getting more of a yield off of the shorter term duration bonds than you are the long. That's not how it should work. This yield curve, so you've got this red line here, which is where we go into zero. We have spoke about this in great detail, but I want this to be on the forefront of people's minds moving forwards. Because essentially, we are now in, I think this is the steepest yield curve that we've had since 1981. And this yield curve has accurately predicted every single financial crisis that we've had to date. The last one obviously being March 2020, which is when we all went into lockdown. That was predicted by the yield curve 6 months earlier. Typically, this can be about a 2-year grace period when you actually have the first inversion going into the crash. But it looks like we're in the crash. So we've kind of had this first yield curve. We had March 2020. And then look at the steep and severity of the current yield curve that we're in, guys. Something big is coming. I am almost certain. We also looked at Mike Wilson's comments saying that the S&P's got a 24% downside, which it kind of looks to be on the trajectory of after this most recent rally. I'm almost certain that something pretty significant and horrifying is coming to the markets very soon. And I think actually we looked at an article for the Bank of International Settlements that spoke about real risk and a potential black swan event caused by the FX swap market, talking to the tune of $80 trillion, that a lot of it needed to be sort of finalized next year, and that's going to cause a real squeeze on everything. It's why we still stay majority out of the market from an investment point of view. We'll try and trade it the best we can, and anyone that's interested in that, you're welcome to join my Patreon. But from an investment point of view, there's no reasoning as of yet, and things could change to get back into the market. Because something pretty detrimental is coming, I believe, and I think that I think that Bitcoin and crypto isn't going to escape it at all. I think it's going to actually be caught up in it all. If the S&P sells off 24%, like Mike Wilson is predicting, that means that Bitcoin and the sort of crypto market is going significantly lower. And this has always been our bias since 44K. We still maintain it. I do get comments saying, "Oh, you're too overly bearish." Maybe I am. At the end of the day, guys, I am never ever going to get everything 100% right. I'll try my best for you guys, but we've been right so far, and we are continuing to expect, or I should say, we've really been right since sort of the start of the year, a few months into the year, but we're continuing to expect downside, and just based on the sort of economic conditions that we have, which is a tightening monetary or a restrictive monetary policy, which causes liquidity to have to flow back into a very overly indebted or a very overly sized debt market. That is enough reason for us to stay out. And there's also this kind of impending doom, if you will, of a pretty nasty recession and an event. Typically with recessions, and just to bring this up again, there's a narrative attached to it. So in 2008, it was the Lehman's moment. In 2000s, it was the dot-com boom. Prior to that, it was the crash in 1989, which had sort of catalysts. And then, of course, this one was the whole what we've all lived through for the past sort of 3 years. So I feel like there's going to be another event that is going to probably cause... My best guess of what the yield curve is predicting is it's going to be debt defaults on a global level. And this is going to call into question the very financial system. We did a video yesterday. Putin came out and essentially said, look, I think there should be a blockchain-based international settlement system. And actually, if you look at the Bank of International Settlements, the fact that these guys can miss $80 trillion worth of debt or dollar-denominated debt that they just didn't realize was out there, and they also admitted they didn't know the full scope of it. With blockchain, you wouldn't have that human error, and this is the revolutionary thing about blockchain as a technology. I've never in my life been so, it sounds crazy to say, I've never in my entire life been so bullish on blockchain as an industry and the crypto space as an industry. Short term, we are bearish, however. or mid to longer term, I should say, we're bearish. So short term, I'm actually still expecting a little bit more upside. We gave this from the sort of 15,600 range about up to 3 to 4 weeks to play out to the upside before we get that next leg lower. And we do think you're very much just playing out similarly to what you did over here, and that you're gonna eventually find yourselves into some capitulation. I'm still not ruling out a total retracement of the FTX move. I think that would completely just wreck enough people for it to be satisfied. But it is hard to long this market given everything going on. I mean, it's like, you know, BlockFi last week, and then the dollar spikes, and then you've got to watch the S&P, and it doesn't feel like a flourishing trading environment, in my opinion. And we have very profitable weeks. Net, we're profitable from our in regards to our trading account, but it's a challenging environment to trade, you know, if I'm being totally honest. It's certainly from a day trading point of view, and even from a short-term swing trading point of view, it's rather challenging. Scalping, I think you can probably do all right, but we spend a lot of time just ranging, doing moves like this, and then you'll get one big move that if you don't catch, you're then just ranging again, waiting for the next big move, and this is kind of how things have gone the whole way down. But we'll see what happens, you know. So we still think that ultimately we can see a bit more upside here. This is kind of originally what we had overlaid, something like this, you know, where you sort of coming into these areas, you may be doing something like this, and you're going to work your way up. Now, I still think that that's on the cards, and I think the fact that you broke this support here, it kind of looks very similar to what you did over here. So I wouldn't rule this out as a probability. You know, maybe there's something like this takes place, you come back up, you start holding it again, and then we get that next sort of leg up, if you will. I can still see this as a potential scenario. It's the only reason, actually, against my better judgments, I'm holding longs here. My risk management would have took me out last week. However, the feeling that I have, and I don't think traders should trade off feeling, which is why I'm saying it's going against my better judgment, is that there is still a little bit more room for upside here. But we could be wrong on that. We've been right on the upside so far, but we've always said, listen, even though we're saying upside, you know, at what point has that upside been achieved? So had it been achieved here at this first target from this short squeeze? Or has it now been achieved here, or is it going to push higher? And the real telling thing is going to be these levels and whether you can actually get back above them. So if you hold it, you come back, you retest, and you're coming down here. Well, you're sort of starting to put in a downtrend there, and obviously the big one would be taking out this low down here. You know, that's sort of assured downside on the horizon. So it's going to be a case of just watching this, observing it. I think, again, people are largely going to be de-risking into next week's CPI prints. The CPI print could be actually the very catalyst that takes us higher. We had a strong labour market, which, of course, has put the wind back in the dollar sales. And at the start of the week, we called for this bullish div on the dollar. You're not going to see it on the hourly. I think it was the daily we were looking at. Yeah, it was. And we said, look, take this seriously. The dollar's got cooked last week and is likely going to have a bit of a retracing move. It's having a bit of a bad day today, but my issue is Bitcoin isn't massively appreciating off the back of it. The stock market's down, the FTSE's down for the UK. Asian markets are marginally down, certainly the Hang Seng. Gold's up slightly. Gold's had a fantastic run, but it's now putting in marginally higher highs at resistance. You've actually got a bearish div here as well. This is the problem with trading crypto right now, is there's so much, you cannot really just be a specific crypto trader, because our market on every little sort of move or splash that the other markets make is getting affected. And this is why we end up in these situations like what we had last week. And let me know, guys, if you like the sort of short-term analysis, because I'm a big believer that price analysis is far more valuable than you know, wave counts and stuff like that. Although, you know, there is definitely an argument to be made for wave counts. But for example, here we were long here, and then you had this, which was the BlockFi and the dollar reasserting. So BlockFi was kind of like filing for bankruptcy. We already knew that was the case. Shouldn't have been a big thing. Then we hold, and we've kind of come up. Are we doing a similar thing here, where we've had this spill, we've shaken some people out of the market, and then we're gonna basically repeat and come up, and then going into next week, you know, if you get a good CPI print, you know, you could really be getting aggressive in terms of the moves ups that you have. So we're not fumbling the longs yet, but it's always been like playing Russian roulette. And for anybody looking to long this market, just be careful. And this is it's not financial advice, but it's friendly advice. Always keep your investment, the capital that you plan on investing, have that separate from what you're trading with. That's always been my strategy. You have different pots for different needs. So I have a liquid investments. Then I have the investment pot that I'm obviously looking to put back into the cryptocurrency market where the price is right. We've been out since 44K. And if we were to buy today, I have no bias with this being the bottom or not being the bottom in terms of personally. If this was the bottom, I'd be happy to buy back. I just don't think it is. And I think that it doesn't make sense buying here given everything that we just spoke about in this video, let alone what we've been covering for the past months. And then you have a trading account that should be significantly smaller, in my opinion. And even from a spot trading point of view, we're not even really spot trading because we're just waiting to invest again. However, we will try and trade whatever up or downside in the short term we get until we can invest again on the futures market. So game plan moving forwards, make sure that yield curve is in the forefront of everybody's mind because it's predicting that something pretty nasty is on the horizon, and I do believe that that's going to be the case. It's obvious we're going into recession at this point, and I think it's going to have a lot to do with it. The short term, I actually still think that potentially we're looking at upside, and I'm going really against the grain here, but we've been going against the grain since down here. It feels like you're almost on the wrong side of the market longing, and potentially you are, certainly given everything happening in other markets. But we'll see what happens today. This is just your daily market update. Hopefully you guys are prepared for the day ahead. Still looking for upside. Whether we get it or not is another story, or whether this is enough upside for the market to then see that next leg lower. We know, again, the analogy of Russian roulette is that we know that the gun is loaded. You know, there's one bullet in that chamber, and eventually you're going to squeeze the trigger enough times that it's going to come out. And that is an analogy to we know that markets are eventually going lower. You just may see a bit more upside before you get that continuation to the downside. So we'll see what happens today, guys. Investment pot still out. You guys know that we've been talking for it for a while. This is going to be the big event next week, and I think you're going to get positioning into it. I think actually the weekend could be rather volatile. It comes out on the 13th, so I know it's the 10th on Saturday. So the 11th is Sunday, 12th is a Monday, and the 13th is a Tuesday. So next Tuesday, you've got the CPI coming out. You're likely maybe going to see a lot more positioning take place. Going into this, looking at the S&P, it's kind of ran into this double top here. Have we got the RSI? Yeah, I wouldn't call that any kind of bearish div, but maybe you find support here today after having a particularly negative couple of days. So it could be a green day. Even though actually looking at the pre-market, you've got the futures market, which is down, which will drag our market down, FTSE down, gold's up, but the dollar may have a little bit of a weaker rest. So we've also said as well, just before I love and leave you, that actually, so we expect the dollar to go back to all-time highs and above, or not all-time highs. It's take out its local high from sort of 11.4, but it may be weaker getting back up there. So it may struggle a little bit. We may not just rocket back up there. I think the rocketing for the dollar comes on the back of potentially what the yield curve's predicting and when everyone runs for safety. I don't think we're there yet. So I think the dollar could be a little bit more placid. And I think that it kind of has been already. And this should have, in my opinion, given crypto a little bit more life than it has. And this is what concerns me about the lack of bid for this market. Just doesn't seem to have high engagement in terms of traders, which is concerning, I think, for us as a sort of derivatives market. All I've got for you in this video, guys, hopefully it wasn't too much of a depressing one. Investment, we still think the market's coming lower. We may see a little bit of short-term continuation to the upside, but that bullet's going to come out the chamber at some point, and just be mindful of that moving forwards. All I've got for you in this video, guys. You enjoyed the content, likes us, appreciate it, so as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys.